Mark, let's talk about the markets in 3 minutes. And let's start with the dominant narrative that's driving us at the moment, because coming out of November, a lot of people asking if that was going to stick. And now we're in a new month, of course, heading towards the end of the year. It does seem that we oscillate day to day, though, between these ideas that higher for longer must dominate versus cuts coming sooner than expected. And we seem to change our thinking, or the market seems to change its thinking almost daily on that front. We drew attention to the ECB lines just yesterday, which allowed another pivot. What are you seeing there?
So I think that the Fed has been consistent about higher for longer for the moment, and that's what they're going to maintain until they're forced to ultimately cut. The market is realising that growth is slowing. The debate at the moment is how rapidly it's slowing. And so I understand why that volatility is there, and it's probably going to remain for some time. It's not going to be put to an end at the Fed next week. But ultimately, it is about kind of pace of cuts. We know the pivot is coming next year. I shouldn't say we know. We're very confident, and that makes sense. It's just how aggressive it'll be, and it'll be the kind of the timeline. As for stocks and that kind of theme, I think they're running on borrowed time in terms of that Fed meeting next week. Either Jerome Powell needs to be hawkish and push back against financial conditions, or else he needs to confirm that he's very negative about growth as well. And both those outcomes aren't, good for stocks. But I don't see what's going to derail stocks until that happens, apart from the fact that we all know it's finite time. So it knows we're running out of time. So maybe they start to slightly preempt that, or maybe the jobs data at the end of this week is what derails the stock market.
Right, and just thinking about that, of course, we saw the JOLTS data yesterday giving a little more impetus to stocks. Maybe Friday brings something different. We'll see what the job story is there. I know not everybody likes JOLTS. The sample size not great, the response rate not great. We seem to see that in a lot of jobs reports. I'm thinking here in the UK at the moment as well. Does that data add to our understanding at all heading into Friday, Mark?
Not massively. And, I'm in the camp that the economy is going to slow very rapidly around now, and therefore I should be kind of pointing to that data point to back up my view. But, I'm someone who likes JOLTS more than others, but it's good for a good picture take of where the economy is. It's not good at turning points. And I think we're very much at a turning point, and most of the market agrees we're at some sort of turning point. Even if they're in the kind of soft landing camp, they agree that we're at a slowdown. And therefore JOLTS, because we're now just looking at October data, it's useless. It's not relevant enough, because we know the economy is strong going out of the third quarter. It only really started slowing in the last month or so. So therefore, that's just too old to be useful, and it's too small a sample size as well.
OK, so that's the US. Just briefly then, in your part of the world, covering the Asia session, as you have been doing, real pessimism around the China story, contrasting, rubbing up against enthusiasm for the India story today.
Yeah, I mean, just really extreme pessimism in China. They just kind of got slightly ridiculous, especially since yesterday was just a change in outlook from Moody's around China. And, Chinese bonds aren't really owned by many foreigners anyway. So this is really kind of an irrelevant story that got front run because the story got leaked. So that is a reason for negativity in Greater China. Didn't make much sense. So finally, we've seen a little bit of a bounce. Will it continue? Who knows? But a lot of pessimism priced in.